Good morning, everyone. Well, the FOMC made a small but significant adjustment in its statement, shifting the debate from whether or not to taper off the quantitative easing to whether to increase it or taper it off. The change in nuance didn't help markets, however, as the worse-than-expected ADP employment report that came out before the Fed's announcement gave rise to a general risk-off sentiment. Stocks closed near the lows for the day, commodity prices fell, and the dollar rebounded in a typical risk-off rally for the U.S. unit. Now that the dollar has survived a shift in expectations for monetary policy, this FOMC meeting could prove at least a temporary bottom for the currency, as happened around other FOMC meetings, for example in September and December of last year, and also in January of this year. Now today, it's the ECB's turn in the spotlight. I expect the ECB to cut the refi rates by 25 basis points, as do some 45 out of 70 economists polled on Bloomberg. The risks to the economy that concerned the Council at its last meeting, particularly a fall in inflation, have indeed come to pass. So it'd be reasonable for them to react by cutting the rate. I expect such a move would have only a small impact, if any, on Eurodollar, however. In the past, when the market expected a 25 basis point cut, as it does now, and such a cut actually occurred, the impact on Eurodollar was either mostly before the announcement, such as in May 2009 when the euro gained in the days running up to the announcement, but was little changed afterwards. Or the impact was even negative, such as July of 2012 when the euro fell after the announcement, although that probably had more to do with the Eurozone crisis that was going on at that time than with the rate cut. I therefore expect no real change in the picture for Eurodollar in the case of a 25 basis point cut. The reason is a cut in the refi rate wouldn't affect peripheral bond yields, and that's the main factor supporting Eurodollar at the moment. Technically speaking, Eurodollar spiked higher yesterday after breaking through the significant 1.5-month high resistance level at 132 the figure. But the rally faded and the pair fell towards 131.75 support. Further support levels from here include 131.20 and 130.75, both of which are well-tested retracement levels. We could see Eurodollar fall towards those levels after the ECB announcement. On the upside, there's now strong resistance in the 133 the figure, 133.20 area, which would be the peak of any rally in my view. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.